All attendees are in listen-only mode.
All right. Good afternoon, everyone. Well, it's afternoon where I am anyway. I'm not sure what time of day it might be finding you at this juncture, but I'm just so delighted that everybody took the time out of their busy schedules to be here with me today. Hopefully, you hear me loud and clear. And if you can, just please let me know. That's always a good start. If you can let me know in the chat. But I will assume for the moment. Yeah, it looks like I'm coming through fine. Good. Uh, awesome. So, boy, what a terrific time to be at this webcast, and lots to talk about. The title of the webcast today is going to be How to Thrive in a Trader's Market. And that, boy, that's exactly what we're in. You know, it really is. So I think this is going to be a very timely webcast for one, an eye-opening webcast for everyone, and I'm just so glad that you're here, okay? Now, with so many different opportunities these days, an endless stream of things coming at you every single day, it's always good just right out of the gate, try to do the best we can to make sure you're in the right place, and you can decide early on, So you're in the right place right now if you currently dedicate or want to dedicate a portion of your portfolio to short-term trading to grow your portfolio faster. Now, when we say short-term, we're talking days to weeks, sometimes months, but on rare occasion, not years. Is the main emphasis here. We're looking at doing trades that typically last days to weeks, not intraday, not super long term, more of a swing trader's temperament to the trades that we do. Okay. Number two, you're in the right place today if you'd like to have winners outpace losers so you can get reliable portfolio growth. And what we talk about in terms of reliability, our overarching goal to the technique that I'm going to show you today is to grow the portfolio month over month over month over month. And it's a very lofty goal and it's unattainable in reality, but if we can get 8 or 9 months out of the year where we can consistently grow that portfolio, boy, I tell you, it's worth the effort to try to be perfect. So month over month is much more achievable than day over day, week over week, and it's a lot better of a goal than just simply year over year. So, and we do hit our marks. So that's the kind of thing that we're going to be talking about today, is how to get reliable month over month portfolio growth as well. You're also in the right place if you want to feel confident in your decision that you bought the right stocks at the right time and that you can sell them at the right time in the future. And of course, the selling is where most people stub their toe, where, oftentimes we're all pretty good at picking good stocks, but knowing when to sell them in the future can be problematic for a lot of individuals. So we're definitely going to be covering that in this webcast here today as well. Okay? All right, so my promise to you guys, if you stick with me here, is that you can adapt and thrive no matter what the market throws at you. And market turbulence actually can work to our advantage. And boy, it really has here this year. Okay, what we're going to need to do that, what we're going to need to be able to do what we just said, and that's thrive no matter what the market throws at us. We're going to need the right tools for the job, and so we're going to be showing you the tools that I use to get that reliable portfolio month over month growth. And we shoot for and have achieved in 3 consecutive years 60% or higher portfolio growth on the year over year basis. Okay, so not only are we doing well month over month, we're knocking the cover off the ball on a year over year basis. Okay, all right, so proof is in the pudding. This is the current portfolio as it stands right now. So you can see we're up 65.05% in this current picture that we have here. It's a little grainy maybe, but you're going to be able to see it a lot more clearly here towards the end of the webcast. I'm also going to show you the stocks that we're currently in, and all that kind of thing. But this is live. It's not some kind of optimized back test, or anything like that. This is actual live executions through a brokerage, through an API, clearing through Ally Invest. Okay, it's hooked directly into Ally Invest, and that is the result in a picture of the performance over the course of the past, well, a little over, almost a year at this point. A little over a year, I guess I'd say. So clearly hitting that 60% year-on-year performance that we talk about an awful lot. Okay. You can see some things that might be of interest. on the picture. And one of those things is the flat spots in the equity curve. Those are times at which we went to cash, guys. And the important thing to note here is in instances like the COVID collapse that occurred earlier this year, we only experienced about a 6% drawdown in this technique that I'm going to show. The reason is that we use a timing model to help us not predict market performance, but react very quickly. So if markets turn super sour, we get out of the harm's way very, very quickly into a cash position. Then when the market starts to recover and starts to move up enough, we get a signal to start buying stocks again. And therefore, we can move this portfolio higher on a month over month basis most of the months out of the year. You can see we went kind of sideways and volatile there from June through, really beginning of October. And then we kind of took off again. So there'll be months that, we don't achieve our goal, but as you can see on the picture, we do a darn good job of it. So, all right, a little bit about me, and then we'll get to brass tacks, okay? Always good just to kind of put, who am I listening to, on the other side of this microphone and speaker. Well, that's me and my lovely wife there in the middle. We love to travel. Picture of Rome there in the bottom left, one of the beautiful fountains there. It's not Trevi, but can't remember the name of it anymore. But boy, we had a ball, just sitting down watching people through all the beautiful squares in Rome. Had a great trip on up into Tuscany and so forth. We love to dive. That's actually Snuba there in the top left, but I do love to dive. Diving is underwater, some of the most beautiful things on planet Earth, actually. In my view anyway. Top right, we like to rescue dogs on the I don't want to say part-time. It's more of a full-time operation to tell you the truth. But work for a rescue here in Charlotte, North Carolina. We save over a couple hundred Great Danes a year. We're not brick and mortar. We're just a bunch of households that like to come together and rescue Great Danes. I've got 3 Great Danes at home right now, and that is my 13-year-old Stella. Stella got her groove back. So she was actually rescued twice before. I got my hands on her, and she has never been back out in jeopardy ever again. Bottom right, that's me playing golf on my parents' 50th wedding anniversary. That was Princeville. Yeah, it's Princeville Golf Course there on Kauai, Hawaii. So anyway, enough about me. Let's get on to our journey today. So our journey today, how to stay on the right side of the market and keep the wind at your back. That's going to be our main priority. Teach you how to do that. Number 2, we're going to look at how to select stocks the market is favoring right now, and that does change. It's a dynamic piece to the puzzle here, and it's going to be a novel approach, something that you've never seen before unless you've seen this particular webcast. Number 3, we're going to look at the best way to manage these stocks to lock those profits in. That's where the rubber meets the road. The founder of my company here, VectorVest, he comes from the tire business, Dr. Bart DeLito. And that's one of his great expressions is, Steve, selling stocks, that's where the rubber meets the road. That's where profits are either made or lost, right? So that's going to be an important piece of the puzzle here. All right, so let's move on to the actual nitty-gritty then. Well, I've talked to a lot of people over the years, I've traveled the world, just about anywhere you could possibly imagine. Even spent about 3 weeks in India traveling around talking to people about how to invest in the stock market. But inevitably, I run across a lot of people and they seem to have hit this invisible wall, right? That the things that they've done for years and years and years just don't seem to be working as well anymore, or at least they wish they could be doing a lot better. So what do I do? And what's holding them back, becomes the question, right? So Steve, what is holding me back? Why am I not making 100% returns in the market? And so something's missing. How come I'm not getting the 60% year-on-year performance, right? Something's missing. What is it, right? That's the key question. Well, I figure that you need to follow a system that will adapt. The adaptive part is really the missing piece. It needs to be adaptable. It can't be just an ABC strategy. And the reason for that is the market favors different things at different times, okay? So sometimes you're best off going for high growth. Other times you're best off going for value. Sometimes it's, exploding earnings and price and volume type things. So you need that adaptable piece to really be able to click all throughout a calendar year and therefore thrive no matter what the market's doing. Okay, so we're going to talk about how we do that. In my mind, any system needs to be made up of three components. And so we're going to be talking about those three cornerstones as we move forward here. So we're just going to draw it out. You know, a lot of people are visual. This can help. First thing that we're going to account for, one of the three cornerstones, is market direction. Second one, trade selection. Third one, risk management. Okay. So what do we want? We want to keep the wind at our back. If we're going to try to make 60% a year, year on year on year, we're going to need to keep the market direction at our back most of the time. And that's a tall task, you know, for a lot of traders that are out there, but we have a great way to do that. For trade selection, what you're going to learn in this webcast is that we've got to evolve, we've got to change, we've got to know what's hot and jump on board when we make any new purchases. And then three, we want big winners, small losers. And we've got a proprietary stop loss that we're going to talk about in this webcast that can get that job done, okay? So where have you guys found it the hardest to adapt in your own trading? This will just maybe cut the ice a little bit. Let me get a better feel for the room. If you guys don't mind, just take a minute and just share some simple thoughts you might have in the chat on where you are having trouble adapting to whatever's happening in the current market. You know, you can start there, or any trouble spots you might have had in the past. I'm going to take a quick sip of coffee, give you a minute just to type those in, okay? All right, so the most common one is the one that tends to be most common in every time I teach this, or every time, you know, I do this webcast, and that is when to sell. Resounding in this particular case. Lots of times there's a lot of other things that are mentioned. What I'm seeing here mostly is having trouble dealing with when to sell. Somebody asked, what's the dog's name? That was Stella from the movie Stella Got Her Groove Back. Yeah, I don't know if anybody's ever seen that, but that's what, you know, so it's a rescue, right? She got her groove back. All right, cool. When sell, yeah, so when to sell is my biggest problem. How to cover a trade. Looks like VectorVest commentary has kept me out of much of the upside. Really? I'm not sure that it should have done that. Buy too late and sell too soon. All right, cool. So those are just a sampling of some of the things that have been said here. All right, let's move on. And I'm certainly going to be addressing each and every single one of those things, including VectorVest has not allowed me to participate. Well, this is 100% VectorVest, what we're going to look at here. And this portfolio is up 65% this year. All right, so market direction. It's the single most important factor in determining your success. It truly is. You can do just about everything else wrong, and if you get that right, you're going to be in pretty good shape. You know, unless you're just picking awful stocks somehow. So market direction is super important, the most important piece. And so what we do for this particular technique is we follow something called the primary wave. What we said earlier is that we want to keep the wind at our back most of the time, right? And so anytime you try to do that, there can be a penalty that has to be paid, where if you're too quick, you can be susceptible to quick volatility changes in the market and open yourself up to, you know, to taking some setbacks. So the beautiful thing about the primary wave is that it's super fast, and it's also super good at, for the most part, keeping you out of those troubling times. So let me show you what I mean. This is a picture of that signal, the primary wave. It's taken from about a 6-month snapshot of the late stages of 2018. And I just keep this one here because it kind of hits all the nuances of the things that I want to communicate, okay? So the bar chart running through the middle, that is of a price of what we call the VVC, or the VectorVest composite. That has all your S&P stocks, all the Russell stocks, all the NASDAQ stocks, and others, all composed into one single ticker symbol comprised of, okay? And so we follow it in terms of following market movement, market direction. Fact is, if you put a Dow, an S&P, and a NASDAQ chart up here, they'd all be very similar. But there are some nuances where this does give you some better actual information on a daily basis, okay? So having said that, we can see that the market had generally moved up for most of the 6-month period and then took a substantial fall, right? Let's talk about the red and the green arrows along the way. So a red arrow is a down signal. That means the market has now moved to a situation where you should move to cash or consider opportunities to make money to the downside. A green arrow is when you have an up signal and on the following day you start looking for opportunities to the upside. Now this was a pretty volatile 6 months, which is why I have it up here. So it does give you kind of the rub, and that is something I talked about moments ago, where if something's too fast, sometimes you can have signals that go back and forth, like you see in this little section right there, where the market's basically non-directional but kind of at a tipping point. That can happen, and no matter how good a system is, you're going to have something like that if it's fast. Okay. What's also true about this signal, though, is that when a market goes on a run, you get in super early. When a market goes on a big fall, you get out super fast. So there's always a balance or a give and a take between those two things. Now, let me say what we do. So anytime one of these green arrows is signaled, we're going to be looking to buy a 10 stock basket, actually. Okay. So that's 10 trades, right? Then we're trying to manage and hold on to those stocks as long as we can, but we sell the entire basket, whatever's in there, when a red arrow is signaled, okay? And we rinse and repeat, and we consistently do that for each and every single signal that occurs. So what does that do for us? Well, again, in situations where the down signals come in, anytime a market goes into a corrective situation, of course, it's going to keep us out of harm's way. But at the same time, anytime a market hits a bottom, which is sure to happen on the backside of even that correction, we're going to get in very quickly and take advantage of that market corrective activity at a very, very opportune time. So that's the good and the bad and the in-between on how the timing model works. But it's that sensitivity, which can seem at times like it's too sensitive. It's that sensitivity that gets us to the 60%. It really is, okay? So that is what we do. That's what we follow. Now there's more to learn here, so stick around. So then we move to trade search selection. What we're going to do is we're going to learn how to evolve with the changing market. In order to do that, one of the complexities that people struggle with is, what do I use to find my stocks that I'm going to buy when the market is rising? Or, there's MACDs and stochastics and all these technical indicators I can put on charts. There's these scans, and all these things that I can find on all these different software programs that identify stocks for me. But the reality then becomes, if there's all these different things to choose from, which one's the best? So I can just simply tell you, the single most asked question of me in my entire investing career here at VectorVest, and having traveled and taught literally thousands of events at this point for VectorVest and even other, situations like money shows and trade shows and things of that nature, is, Steve, there's all these different opportunities, what's the holy grail, right? What's the number one technique? What's the number one strategy that I should use? And the reality is there are about a half a dozen, or baker's dozen strategies and techniques that tend to be the best all the time. But the other reality is it doesn't mean that it's going to be the best this time, or even close to being the best. And so what we did here at VectorVest is we took that information and we built a tool around that idea, okay? On us being able to better communicate, where should I focus my buying when I buy stocks today, based upon running a search to find them, okay? And we call that tool the Derby. And so the problem, which one do I use? The solution, the Derby will tell you, and I'm going to show you how we come to that solution, okay? So first I want to talk about what the Derby is and what it does, kind of the spirit of the Derby. Why do we even call it the Derby, right? So in VectorVest, we have a couple hundred searches that we put into this tool. And what it does on a daily basis is monitor the performance of the top 10 stocks from each of those searches. Thereby, you can get a sense for how robust that scan is on a daily basis. But then what we also do is we have archived the last 90 days worth of that information. A lot of people don't realize that. And that is very useful data, because while it might be true that it would be very unscientific to just see what's at the top of this list on this day and buy those 10 stocks because they were the hottest for the first 30 minutes of that day, it would be a whole other ball of wax, right? Or a whole other, a much better decision, if you will, if I knew that that strategy that's at the top was also the top strategy for each of the last 89 days, right? Or 66 days, about 66, 67 trading days in a 3 calendar month period, okay? Depending on holidays and things of that nature. So it's one thing to know what's hot today. It's a completely different thing to know what's been the hottest over the last 3 months and what's still hot right now. So that's how we inevitably use this data to pick the strategy, to pick the 10 stocks that we're going to buy. And why do we do it? Because it worked for the last 3 years on all of those signals in aggregate over the last 3-year period with real money. So that's why we do it. That's the answer. It started out as an idea, and it turned into an actual real life performer in real time, and has been for 3 consecutive years. Okay, so let me go into the Derby and let me show you around here really quick. I'm going to show you exactly how I pick the searches. And if you stick around to the end, I'm still also going to provide a document that will list out some of those searches for you, which is a terrific freebie just for being here today. If you're here at the end. If I forget, guys, remind me. I've got the PDF ready, okay? So I'm going to go to the Derby tab. And on the Derby tab, this is today's Derby. So what do you see is the top strategy at the top of the list today? Energy stocks, okay? Guess what? There's a lot of clean energy in here, but there's some other things, but predominantly clean energy. Ameresco, Jinko Solar, anybody see that one today? I think it was up even more than 11% at one point. You know, but on average, this basket of stocks was up 9% today, right? 9% today, okay? Marijuana stocks, is all these legalization issues. I think there were 4 more states, if memory serves correctly, that came on board in this electoral cycle to allow for marijuana sales in those 4 new states on a medicinal basis, at least. In some cases, not even for that. But you get the point. So marijuana stocks are actually going on a tear. There's a beautiful little stock in here called Grow Generation, where, well, that's a story for another day. But if I had to pick one, that's your baby. Okay, and if you know or have been around me for the last year or so, you will know I've been saying that for the last year. But anyway, you know, the Derby gives us that information very quickly. Again, that's just a one-day look. So that's great, Steve. They were hot today. I get it. But what tells me they're going to be hot tomorrow? Well, would you feel better about it if one of those strategies has been hot for the last 3 months in aggregate, right? So what we do is over here on the left, there's some different modes. And one of the ones that we're going to use is called vary the start date, okay? So when we do that, a calendar appears, and I can go back and I can look at the last 3 months. Okay, so we'll go from 8/4 to 11/4 up through yesterday. What's at the top? Energy stocks. What's second? Hottest growth stocks. So, but when I click on the top bar, instead of listing out the 10 stocks, now it's listing out the runs. And the first test goes from 8/4 to 11/4. The stocks are up 31%, 121% a year, okay? Next test goes from 8/5 to 11/4. Now it's up 44%, 176% a year. And you can go on down. 8 or 9 out of 10 winners for the most part. Here's 7 out of 10, 6 out of 10. Look at the percentages. That's why this is at the top of the list. You say, why do you have so many tests? These strategies can find different 10 stocks every single day, potentially. Now, when stocks are this hot, a lot of times the search might find a good number of the same stocks on a daily basis. But as you go through a 3-month cycle, you're going to go through many, many different combinations of those 10 stocks. And you might end up with several hundred different ticker symbols before that 3-month period is done. See what I mean? Okay, so what it's telling us then is how consistently the top 10 stocks from this scan energy stocks has performed. It's performed wildly the best of any other search in VectorVest. That would be including things like S&P 500 stocks, high market capitalization stocks, low price stocks, exploding earnings stocks, technical crossover scans, price and volume scans, candlestick patterns, all these different things. By far and away, the best opportunity for the last 3 months, and therefore my belief, at least going forward for the next several days to several weeks, is likely going to be energy stocks. Okay? Hottest growth stocks number 2, and so on down the list. But one set of test results does not a complete test make, at least in my book. So I set out to get confirmation of that. And what I did then was take another mode that we have here called a sliding window. In the sliding window analysis, okay, what we do is we take market direction completely out of the equation. And what we focus on is how well do the stocks produced by the scans do for only the first week, any day that we would have bought them in the last 90 days. If I would have bought 10 stocks on a Monday, how would they do to the next Monday? If I bought them on that next Tuesday, how would they do to the next Tuesday? If I bought them on a Wednesday, how would we do to the next Wednesday throughout the entire data set, okay? And what that means is we're looking for robust strategies that pick stocks that tend to go up the very first week that you buy them. And then what search does the best job at finding those? And that's whether the market's going straight up, going straight down, or going sideways, and everything in between. Because that's what the market does in a 1 week, on a 1 week basis, right? Some weeks it goes straight down, some weeks it goes straight up. Usually it's somewhere in between. Okay? So with energy stocks, not only were they the best opportunity from a buy and hold basis from any calendar date in the last 3 months to now, they were also the best bet on just a weekly hold. And if you remember the market timing signals that we had on that graphic, they come pretty quick, right? So we need stocks to move fast. So that's what this one is enabling us to do. Find a robust strategy that picks winners over the longer term and over the very short term as well. With those two modes. That's what was in my mind when I built this system, okay? And fortunately for all of us, it just continues to work. I could have gone extra layers. There's more things that we can do with this tool but what I've learned over the years, one of the things that Dr. DeLito ingrained in my head, ever since I first started working here was, Steve, I want you to get 80% of the result with 20% of the effort, okay? So yeah, I can layer on about 5 or 6 dozen more things if I really wanted to, but it's only gonna give you incremental increase in performance, and so it's not worth the trouble. And it's also, you can run into situations that are called over-optimization, okay? And so what we're trying to do is prevent all of those symptoms. We don't want to over-optimize, and we don't want to make this thing so difficult that nobody can do it. So how do we pick the strategy? We pick the strategy that is the top of both lists. Now, if there's no clear winner, like energy stocks is clearly the best. It's at the top of both lists right now. If it weren't at the top of another list, what I would do then is just kind of score the lists up. So, if let's take, let me go to just bullish searches here. Let's take hottest growth stocks. So hottest growth stocks is third on this list, right? If I go back to the start date, it's second on this list. That's a score of 5. 2 plus 3 is 5. Energy stocks is 1 plus 1. That equals 2. 2 is lower than 5. Energy stocks is the winner. Okay? So we did energy stocks on the prior run. And one of the rules that I have in the portfolios is don't trade anything that you've already traded in the last 31 days. So we actually chose hottest growth stocks on this most recent campaign. And so there's coaching that comes into play here, okay? Where I felt like when you go super far down that energy stocks list, you're better off switching to that next best scan on this next run. But That's how it works. Okay, so we picked hottest growth stocks. Now, when I go over to RoboTrader here, here's that same equity curve. We made 4.78% today. Okay, what's in the portfolio today? We've got Grow Generation. Remember we talked about that one? Digital Turbine, Pinduoduo, Pinterest, Zoom Video, BR Group, Quiddle, Co-Diagnostics, Travel Centers, and GWP Pharmaceutical. Okay, that's what's in there right now. We do manage the stocks. We'll come to that here in a little bit. And you can see, and just we bought these stocks, guys. Let me go to the timing graph. Oops. Come on, Steve. What are you doing, man? We bought these stocks. Primary wave, right? Most recent primary wave signal was right here on 11/3. We bought stocks the next morning on 11/4. We've owned those stocks for less than 2 days. Less than 2 days, okay? So when I go back to RoboTrader, Grow Generation's up 21.29% in less than 2 days, okay? Digital Turbine 12, all, and so we will stay with those stocks as long as we can until we get one of those red down arrows, right? Or they hit a stop loss, you know. So the stop loss is the next part that we're going to get into. Quickly before, let's go to the stop loss. Let's go to the stop loss now because I think it's a good exit point. Okay. Risk management. Best choice for letting winners run and keeping losers small. No exit plan in any strategy, any technique, not a good idea. You can kind of get away with it in this one because the timing is so fast. Typically, stocks aren't going to just, you know, run away from you with what we're doing just from a market timing perspective. However, it's never a good idea not to use a stop loss. So what we use for this technique is something called profit locker. Now, it's similar to a floating stop. It leaves a lot of wiggle room when you're below the target percentage that you're shooting for, but it tightens as you get closer and closer to that target percentage. It will also chase a stock higher if it goes above your target, but it does so with a very tight trailing stop. Okay, so it's kind of a dynamic stop loss. It's proprietary, so I can't tell you exactly all the nitty-gritty details. It's actually patent pending as well. We want you to use Profit Locker. What I'm going to do is show you what Profit Locker looks like and what we use. So if I come out here to the right, here you can see what's the stop criteria. Profit Locker. Okay, our target is 28, our stop loss is 7. That's our initial stop. That's like worst case scenario, barring a stock gaps against you, and that can happen, and you'll see here in a few moments that it does happen from time to time. But that's our initial stops. We're shooting for 28. We don't want to lose any more than 7. That's a 4-to-1 risk to reward ratio. Fact of the matter is, most of the trades are stopped out somewhere in between. Some do well exceed 28%. We've made as much as 42, I believe. And some go well below the stop loss. We had one stock gap against us nearly more than 50%. We got into this little bio, we just following the rules, but got in this little bio, failed, phase 2 clinical trial. And so I'm going to show you all the warts in the system as well, because they're there. Okay. If I come up here to reports, here's the trade history for just the last year, okay? So here's Penn, Virginia. Penn, Virginia was actually 45%, okay? That was done in just 2 days. Remember how we talked how some of the stocks we own right now are up 20% in just a couple of days? This one was 45. XAN was 29. Norwegian Cruise Lines was 28 back in April. Redwood Trust, and so you got a lot of good high winning percentages here, right? Go to the bottom. There's that little bugger. Proteostasis, PTI. We lost 57% because it gapped, right? It gapped. There's no way to prevent that. Next biggest loss was 12. Then you start getting a lot closer to that actual 7. But all of these would be stocks like AXU. It would have had to have gapped against us a bit to get to 8%. You with me? Okay. And then there's everything in between. You're going to have lots of stocks where we even take as little as a 3 or 4% gain sometimes. But the trades durations, here you can see we're typically just days to weeks. So there's lots of trades. The only way to get to 60% in a year, on a yearly basis. This year, I get it. You might have bought a few stocks. Listen, everybody could have bought stocks this year and made 60% on a trade here or there, or even more if you're using out. I get all that, but you can't do it every year, and this system does. It does it every year. Okay. And some of you are probably thinking, what is this guy talking about? I haven't really been having a struggle this year, Well, actually, this has been my best year. Not just even with this system, but on my own account, because that volatility creates a ton of opportunity, actually. What you got to be good at is knowing market direction. And that's where that first piece of the puzzle came in, right? With the primary wave. But anyway, so we're at 65.9% right now as it stands, again, up 4.78% today. Those are the stocks that are in there right now. You can see some of them are getting close to the stop. I want to show you a little bit more cleanly what the stop loss looks like. So I'm going to take you into the bowels of the trading system here. You can see we're using primary wave as our market timing. You can see we're using hottest growth stocks, and I gave you the reasons why. We used energy stocks last time around, and we're still in the throes of not really knowing the total outcome of this election, although it looks like it's pretty well settled. And probably clean energy stocks still benefit, but not as big as if there would have been a complete blue wave. So my coaching was, let's not sink everything we got into just clean energy stocks. We'll cherry pick a few on the side, okay, and buy some on the side. What we did was hottest growth for the reason I just stated, okay? That's where the coaching comes in. And it was the number 2 strategy, right? So if I come in, click on customize, here's the primary wave. The rules are listed here. We don't need to go through all of that, I don't think, in this webcast. Here's where the search is that we're using. Here's the stop. So this is what Profit Locker actually looks like. Now, it does make a big assumption. So Profit Locker is the red line. Black line is stock price movement. Now, the assumption is linear stock price movement. So the assumption is just incremental stock price movement of the same magnitude throughout the course of time, which is a huge assumption in the stock market, right? But it's the only way that we can actually show you the integrity of the curvature of the stop loss itself, okay? So the main message, it starts out with an initial trailing stop. Once profitability is assured, okay, then it levels out to accommodate some volatility, to allow you to stay in a stock even if some volatility creeps in. Then, as you get about halfway to your target, it really starts to move and accelerate up towards your stop loss, up towards your target. And when you get to your target, it doesn't just stop you out right away. So it attaches a very tight trailing stop. You can see the trailing stop at the end is much tighter than the initial trail, okay? But that's how it works. That's how we've had about 6 trades over the last 3 years that have gone up more than 40% actually. And those are also typically the result of gaps, but not gaps against us, gaps for us. See what I mean? So that's how this works. Another thing I can show you here really quick is a better report. Okay, so one of the things that it'll show you is we do a lot of trades. We've had 386 trades, in the last year. 42% accuracy though. And again, with a 4-to-1 target to initial stop loss, if you're 42% accurate, you're going to hit the cover off the ball. We've been running at, that's the lowest watermark we've had, by the way, year on year on year. We've always been in the 40s. 42.49 is the lowest I've seen. Actually, it was a touch lower just before the last campaign. But, this is about as bad as it gets right here in the very low 40s, okay? So that's how this works, okay? Now, you got to know the nitty gritty because, I don't like to keep anything hidden. If you decide this is something that you're going to want to do, I want you to be ready for it, But that's how you get this, And so the effort is worth it, okay? The effort is worth it. I reckon we can do better, but then it requires a lot more work, and we're not going to do that. So what I'm going to do now is move us back into PowerPoint and just round this out. How is this system different from what you guys are doing? How is this system different from what you guys are doing? This is usually where some interesting responses come into play. How is this different from what you guys are doing now? So I get an initial question here. Are profit locker percentages adjustable? They are. They are adjustable. Yep. So one thing that I'll show you while people might type a few of those answers in, I've actually started a second system. This is just, again, an idea at the moment. It is with real money. This one's trading through interactive brokers. All I did was switch the timing. Some people are, struggling a bit with the frequency of the signal of the primary wave. So I did this one because it slows the timing down a little bit. What you'll see is we were up 5.43% in this one today, 8%, but we just started it less than a month ago, okay? It's already up 8%. Now, when I come back to the timing, what that means is, so you're gonna have a chance to follow either one, I think is the long and short of why I showed that. And when I come into the timing graph, we use this timing model here. And when I put the arrows on, you'll see that they occur a lot less frequently. Like, I really wish I would have started this one in April of this year, because we didn't have a down until you got here. And then we stayed down until you got there, okay? And then we just went long again, literally the same day, yesterday with this model. And it still does a pretty good job at keeping you out of harm's way when things turn super sour. The out was a day later, but that did matter in this case, a good decent amount, I would say. So it's a little bit slower, and this is, I would say, a little unusual. You don't tend to have signals last this long with a DEW. I mean, if you look back, it is a lot less frequent though, a lot less frequent. Okay, so you're gonna have two different varieties to choose from. I'm trying to broaden it out, gives everybody out there a different option, okay? But we do the same thing with just about every other thing that we talked about. We do it the same. The other thing I would say though is you want to match your stop loss to the frequency of the market timing signal. So we do use a different stop loss. Let me show you that. Somebody was asking a stop loss question earlier. So this one's 50-15, okay? If the signals are going to last sometimes 2 to 3 times longer than the other system, then this is an effort to slow the trading down a little bit. And for people that don't want to do several hundred trades a year sometimes, this should slow it down considerably. Both the timing and the stop loss, will do that. And I think this will still be very robust. I don't want to over advertise this system yet though, because right now, this is the idea, like when we had the first idea 3 years ago. So we're in the idea stage. I have put real money to it, just like we did last time. And people are doing it right now, but it's because they wanted to, and we worked together and we created this as a choice for them, okay? All right, so let me go back to the webcast. The difference between your system and mine is yours is making money. Oh man, well, give her a shot, give her a shot. It's been doing it for 3 consecutive years, and I've had other systems before that. My main goal was to create a system with the Derby, because we just, Dr. DeLito came to me one day more than 3 years ago, about, I don't know, 2 or 3 months before I finally got it all put together. And he said, Steve, the single most asked question we get in an event is, what strategy do I use? We built the Derby, 2 years ago. Make a darn trading system with it, man. What are you doing? And so I sat down for a couple of months and I put this together, and I ran a bunch of different variations initially. And what you see is the net result of the idea that worked right out of the gate. And it's never looked back, so that's the whole story. That's the whole story. All right, I figure this, guys. I figure you showed up today here because either your trading plan has stopped working, you've hit a wall, want to take your trading to the next level, or you just want to be trading successfully in all market conditions, right? Well, today you learned how to do that. We learned how to keep the wind at our back on our short-term trades. We're going to use market analysis. We're going to use, now we don't predict. All of those signals that I showed you, they're mechanical. They're rules-based. They're rules-driven. You can see none of them marked the absolute bottom. None of them marked the absolute top, although they got pretty darn close, right? We follow trend. All of those are rules-based, trend-following systems. And I want to make that clear. It's not, hey, I think we should make a DEW call today. That's not what we do. They all have rules, and if you want to learn more, you're going to be in a position to do that. You'll know exactly the rules and exactly when things are about to happen, okay? This will also, what you learned today is that you can have a stress-free way to do all this. Because everything is rules-driven, you know when to start buying stocks, you know what search to use to buy your stocks, so you know the 10 stocks that you're going to buy, you know exactly the stop loss that you're going to use, right? And you know when you're going to sell them, if they hit a stop or we get it down. It's all done. All you got to do is follow it. So that's what I'm offering today, is a system that has everything that you need to do. It tells you what to do. Okay? All you got to do is follow it. You can even automate it if you have RoboTrader, which that was the tool that I was showing you that's linked to brokers. It's not required. It is an additional purchase. It makes things super easy, you know? But you can do the same thing that I did there in another part of the program called Portfolios. And what it will do is send alerts to your cell phone. You would then log into your brokerage and be able to execute the orders. And by the way, all of this might be tripping you up. Boy, I'm going to have to learn how to use software or whatever. Look, I've been around the block a long time. And so what I've done, I've actually created a document, okay, that we used to teach what we used to call an executive premier workshop, where we used to bring people in, show them VectorVest, and then have exercise and walk people, you know, by the hand through the software. So I've got one here. Oops, that's bearish. This is bullish. We don't do bearish. Bearish was actually part of the idea as well, and it hasn't worked out. So we only go long in this system. But here's the guide. You got 3 sections: overview, implementation, and monitoring. As I go down, same graphic, right? When to buy, what to buy, when to sell. When to buy, primary wave, right? What to buy, consistent derby performer. How do I do it? Oops, I might have picked the wrong one. There it is. Step A1, click the Derby tab. Step A2, change the analysis mode to vary the start date. Step A3, use the date range calendar and select the oldest start date possible. Should be 3 months ago. A little tip. You know, that's how detailed it is, okay? It will literally walk you through this. I don't even have to be there. It'll walk you through how to set all of this stuff up, find the right search, and do it for yourself. It'll even give you tips on what to look for when you're monitoring it. How to set it up in Portfolio Genius if you don't have a RoboTrader, right? So that you can get the alerts. Well, turn the bloody Genius on. That's the first thing. Otherwise, you don't get the alert, you know? Only do that when you're ready to launch the trading. So it's all there, okay? It's all there, and anybody can do this. Anybody can do this. I wanted to make sure that anybody could do this. That was one of my main priorities. I wanted to absolutely make sure that anyone can get this done. So the big lesson, you can follow a system that will adapt and make money no matter what the market throws at you. There's no such thing as I can't. Listen, hopefully you've learned some of the same things I have over the course of my very short life. At least some of you are probably thinking that anyway. Feels like an eternity to me at times. But I've done so many things people told me I would never be able to do. One of them is talking to you like this right now. You know it? I was the little fearful kid in the back of the room in speech class that nearly flunked out in college, you know? almost had a heart attack on the way to the front of the room. Now I get up on stages and talk to thousands, if not tens of thousands of people sometimes. It's just, and it's like the easiest thing I ever do. If you want to do it, you can do anything you want to do, and I really mean that. And that goes for anything in life, really. So I decided to put this system together for you, and I wanted to make it stress-free. Okay, I wanted to show you that you can adapt, you can thrive, no matter what the market throws at you. I want you to be able to get 60% a year, year-on-year performance. I can't guarantee it. All I can tell you is that's what we've seen year on year on year so far. And guess what? I have been doing this very webcast under different titles sometimes for more than a year. And we got people in the room that saw this webcast. They're in there doing it right now, and they are just as successful as what you see right here. Okay? So you can test drive this for 29 bucks. You can watch it. You don't even have to commit money to it. You can just watch us work for 30 days if that's what you want to do. You know what? It's worth $30 to me to go into this room and watch this guy fail. Cool. I'm cool with that, because when you get in there and you see how much money this thing makes in that month, right? I know you're going to stick around. So I'm cool with that. You get 30 days for 29 bucks. If you don't do this offer, where I'm going to show you and have shown you a system that makes more than 60% year on year on year, right? If you don't take us up on this, you're saying that's not worth $1 a day of your time, is basically what you're telling me. Which is crazy, because we have a daily trading room where we literally take you by the hand. People watch us do it every single day. On top of what I've showed you here, we also do cherry picking. So a couple of the recent cherry picks, one was Nautilus, NTLS. Another one was Digital Turbine before we even bought it in the portfolio. And so we make picks all the time. And so even though the system might be pretty well done for a day, right, we still look for other opportunity, even on top of what we talked about in this webcast. We also take a look at stocks that people are interested in, tell them what VectorVest has to say about them. So it's interactive. People are always throwing stocks at us that they think are super hot and that everybody should know about. We pull them up on the screen. We all look at them. We talk about, what looks like a good entry. Where would the stop loss be? How to trade, basically. www.vectorvest.com/thrive is where you go to be a part of that group. And for $29, you get to do it for a month. So you're going to get the software. You're going to get all the tools you need to do exactly what I told you we do. You're going to get all the coaching. By the way, we get together every day, 9 a.m. Every day the market's open. 9 a.m., 30 minutes before the market opens. That way we can take care of any business that needs to be handled before the market opens up, okay? And we stay with you until 10:30. So for the first hour, we stay with you an hour and a half. For the first hour of the market, we're with you, okay? That's where most of the decisions are made, is in the first hour. That's usually when a lot of your trading is made. That's usually when we're going to initiate a new campaign or close a campaign down. All those major things occur during that time. That's why we do the hour and a half. Okay? 29 bucks, you can test it out. Give it a shot. And, worst case scenario, what's $29 anyway anymore? You can hardly buy 2 Happy Meals with $29 these days. So act now. This offer is only valid through Sunday. So I think it's Sunday at midnight. You do get access to that trading room. It's called the Jockey Club. So if you decide to take us up on this offer, by the way, I put the link out into your chat. If you decide to take us up on this offer, you will get email correspondence inviting you to attend the Jockey Club. You get a new personal login ID every single week for that week. Okay? And you can also, in VectorVest, which is the software, let me try to go back in here and show you. In the Derby itself, I'm on low resolution. There's actually a button right here that says click here to enter the Jockey Club. Okay? So you can enter the Jockey Club through your personalized login to the software right from the software itself. You don't have to go looking for the email all the time. Okay? All right, cool. But you only get those, you only have the Derby tab, you only get that button and all that if you do the deal. Right now it's not in your system. Okay, it'll only be in the system after you do the deal. And then just a big thank you. So now, I'll do some time here to answer questions. But I'm gonna make sure that you've got that link. So whether some of you that are on YouTube, I can't send you a link out there. So just go to www.vectorvest.com/thrive. When you do, it'll take you to this website here where you can do the order. 29 bucks. After the first month, it goes to $228. That includes all the software you need to get it done. The live jockey club, hour and a half every day. The market is open, all of it. So the coaching, the documentation, the software, all of it. $228 a month. At 60% a year-on-year performance, I reckon we can figure out pretty quickly if it's going to pay for itself or not. Most people's experience is that it will. Hurry, you've got 3 days, 16 hours, 33 minutes, and 48 seconds. I'm not going to take the time to go through all the benefits because you now know the main ones that you need, okay? All right, let me go and close out of this and take some questions. All right, so I'm going to cut you guys loose on YouTube. Thanks for sticking around. Love our YouTubers. Thanks for that. Have a nice day.